Okay guys, so now we have learned all of our trading strategies. Now how do you execute them? The right way to execute them. I have taught you guys market structure, premium and discount zones, auto blocks, fair value gaps. How do we put them together and use these strategies? So the the very first thing, the most important thing is you want to look at the higher time frame market structure, right? So for example, 4-hour time frame. Okay, you should be looking at 4-hour time frame if you are taking trades on a 15-minute or 5-minute time frame. Okay, or even an hourly time frame. Actually, for an hourly time frame, you should just use the daily time frame. So let's say that the overall market structure on the 4-hour time frame is bearish, right? So we're creating lower lows, lower highs, lower lows, lower highs, lower lows. So this is clearly a bearish trend, right? Now, where you should be taking, which you should be executing those strategies, right? I have taught you ABC strategy. For example, ABC strategy, right? So we are going to use the premium and discount zones to determine where we should be looking for those setups, right? Or any sort of strategy. It doesn't matter if it's under over pattern or it could be any, right? So you want to use, so see, we have this break of structure, right? Then we have this break of structure. So the move that broke the structure, we draw the Fibonacci from the top to the bottom of that move. And now anything above the 0.5 level is considered to be in a premium zone. This is where we should be looking to look for our patterns. Okay, it could either be ABC pattern, ABCD pattern, under over pattern, auto flow trading strategy. It could be anything. You just want to take a trade in this region. Okay, so let's say price goes back into the premium zone, which is above the 0.5 level. You could look on the, and then you drop down to the 5-minute or 15-minute time frame, right? And then you look for an ABC pattern. So now when you are on the 15-minute time frame or 5-minute time frame, your ABC is going to look like this. I'm just giving you an example of ABC, but it could be any of my 9 trading strategies. Okay, you're only going to take all of my trading strategies except the actually all of them above the premium zone if the overall trend is bearish, right? So let's suppose that now I'm on a 15-minute time frame. So you're going to look for an ABC pattern which looks something like this, right? And then you'll wait for market structure shift in the range, and then you take your entry, and then you can target this level. Or if you want to target like a big number, you could target the this significant low here, right? Similarly, if we are looking, if the overall trend in the market is bullish, so we are trading higher highs, higher lows, higher highs, higher lows, right? You want to mark out break of structures, right? So we got this break of structure, and then we got this break of structure. Now this move broke the structure, right? So we're going to draw our Fibonacci from the low to the top, and then we are going to only take our trade in the discounted zone region. All right, so as you can see, anything below the 0.5 level is considered to be in a discounted zone. So when price comes back into the discounted zone, we are going to look for a trade. It could either be, sorry for that, there's some truck going, I don't know, man. Okay, so once the price is below the 0.5 level, you simply look for those patterns, okay, in that direction. So let's say you're looking, let's say when the price comes below the 0.5 level, you are looking for under over pattern, right? So you're gonna look for a support level that gets created something like this on a smaller time frame, right? And once it's created, you mark out the auto block, which could be here, right? And then you wait for a fake out below this level, and you take your entry on the retest, and boom, it could either go and sweep these highs, or it could either go up there. Okay, so this little thing is how you should be putting everything together. All right, so one more thing that you should know, that if there's no fair value gap with auto block, right? So we have this candle, right? So let me put this like this. Okay, so we have this candle, and then we have wait, what does it look like? I just forgot. Okay, and yeah, you have something like this, right? And you then have this, right? So this right here goes here, So this is our fair value gap around here, right? As you can clearly see. Now, the very first candle is your auto block. Okay, it should be considered as your auto block. So you could take your entries from the auto block or from the fair value gap. If you take your entry from the auto block, you will get a better risk to reward ratio. But if you don't want to miss out on a trade, you can take your entry from the fair value gap. So I hope that's clear now. We should only be following, the higher time frame market structure, and then we should be trading in the direction of the market. So I hope this helps as well.